Welcome to this explainer. We hear endlessly about the software, the algorithms, the data, but none of that actually exists without the microscopic hardware doing the heavy lifting. So today, we're diving into the absolute physical reality powering the AI boom. By unpacking Taiwan Semiconductor Manufacturing Company's massive second quarter 2026 earnings report, we're going to get a front row seat to the actual engine of the global AI revolution. But before we look at the chips themselves, we have to ask ourselves a pretty fundamental question. What does the future of AI actually cost? Like, how much financial and physical fuel does it take to build this future? Because as we're about to see from TSMC's data, the sheer scale of investment required right now is fundamentally rewriting the rules of the tech industry. To make sense of all this, we're going to break down this complex roadmap into 5 clear sections. We'll start with the AI megatrend, then look at the unprecedented financial fuel required, map out their expanding global footprint, peek into the A14 era approaching, and finally, wrap up with partnership over profits. All right, let's jump right into section 1, the AI megatrend, and how structural demand is rewriting the forecasts. TSMC is seeing such overwhelming structural demand right now that they are quite literally having to rewrite their own forecasts. They've actually just bumped their full year 2026 revenue growth expectations to slightly above 40% in US dollar terms. That is massive. And what's driving this? Well, it's a huge surge in what TSMC's CEO, C.C. Wei, calls agentic AI. This new wave of AI isn't just relying on specialized accelerators anymore. It's actually completely revitalizing the demand for traditional CPUs in data centers. And whether those CPUs are using x86, ARM, or RISC-V architectures, they are pretty much all TSMC customers. They're basically supplying the picks and shovels to absolutely everyone in the gold rush. But, navigating a surge like this isn't exactly easy. CEO C.C. Wei humorously noted that every aggressive tech CEO comes to him pitching their absolute maximum capacity needs. He joked, "I believe every customer tell me the truth. You put all the truth together is not a truth." It's just a brilliant insight into the semiconductor business. TSMC has to carefully assess these multi-year trends, both top-down and bottom-up, to figure out what the actual realistic capacity needs are so they avoid overbuilding. Which brings us to section 2. Unprecedented financial fuel, and how they are funding the AI compute bottleneck. Creating these advanced chips requires a scale of capital expenditure that is frankly hard to even wrap your head around. Just look at Q2. Revenue came in at a massive $40.2 billion. And you can see exactly where the market is pulling them right now. A staggering 77% of their wafer revenue is coming from advanced technologies at 7 nanometers and below. The 5-nanometer and 3-nanometer nodes, those are the undeniable workhorses right now, making up over 60% of their revenue combined. The world is just hungry for the most cutting-edge silicon possible. So the real question is, how do you actually fund that level of demand? Well, TSMC has drastically raised its 2026 capital expenditure budget to support it. They're now projecting between $60 and $64 billion for this year alone. That's a jaw-dropping figure. And between 70 and 80% of that money is being allocated directly to advanced process technologies. As C.C. Wei pointed out, this is a very heavy investment, but they're doing it because they see a multi-year structural AI megatrend that is showing absolutely no signs of slowing down anytime soon. But of course, progress has a price, right? Launching all this new technology actually squeezes their margins just a bit. In Q2 2026, their gross margin was a super healthy 67.7%. But looking ahead to Q3, they're guiding that down slightly to 66%. Why the dip? Well, it's primarily because of the steep ramp up for their upcoming 2-nanometer technology, combined with the costs of building their new overseas facilities. That dilutes the margin by about 3 to 4 percentage points. Innovation at the atomic level is incredibly expensive before it becomes highly profitable. And that overseas expansion perfectly sets up Section 3, expanding global footprint, and how TSMC is manifesting the future globally. So where exactly is all this money going? Well, to secure the U.S. supply chain and meet the intense demands of major American tech giants, TSMC just announced an additional $100 billion investment in Arizona alone. That is an absolutely monumental commitment to building out the U.S. semiconductor ecosystem. But Arizona is really just one piece of a much larger puzzle. Yes, they're planning 4 more new fabs in Arizona, combining front and back-end manufacturing. But at the exact same time, they're building 13 new leading-edge and packaging fabs back in Taiwan over the next several years. Plus, they're expanding specialized mature nodes globally. You've got their JSM facility in Japan ramping up CMOS image sensor capacity, and the ESMC facility in Germany catering specifically to automotive and industrial nodes. They're literally manifesting the future of hardware on a global scale.
Moving on to Section 4, the A14 era approaching, where we take a peek into the very near future of semiconductors.
Zooming in from the global map down to the microscopic level, let's look at the A14 node. Stepping from the upcoming N2 node to the A14 node, which is their second generation of nanosheet transistors, unlocks some massive physical upgrades. A14 offers a 10 to 15% speed improvement at the exact same power, or incredibly, a 25 to 30% power improvement at the same speed. On top of all that, it packs nearly 20% more chips into the exact same physical space. This is the exact math that allows our devices to just keep getting smaller, faster, and boast better battery life year after year. But here's the reality check. In the semiconductor world, there are absolutely no shortcuts. The timeline is long. A14 enters pre-production in 2027, but volume production won't actually hit until 2028. And its derivatives, like the A13 and A12 families, which introduce crazy innovations like superpower rail technology, those won't even reach volume production until 2029. As CC Wei stated so perfectly, it takes more than 5 years to develop the technology, prepare the capacity, and ramp it up. There are no shortcuts. Why this matters to you is pretty simple. The actual technological capabilities of the smartphone in your pocket, or maybe the humanoid robot in your warehouse in 2030, are literally being cemented and funded by TSMC right now, today. Finally, let's look at the philosophy driving all this in Section 5, partnership over profits, playing the long game in AI. Now, you might actually be surprised by this next part. During the earnings call, CEO CC Wei playfully admitted he was kind of jealous of memory competitors who are banking massive 86% margins right now, compared to TSMC's roughly 68%. Think about it. As the sole provider of the world's most advanced chips, TSMC could theoretically price gouge their customers to no end. But they don't. He actually used this hilarious metaphor to explain why. He said, choosing a kind of technology partner is not buying a milk from 7-Eleven. You don't like it, you go to another store. No. Semiconductor partnerships require deep, deep trust, test chips, IP migration, and years of intense collaboration. It is not just some quick transactional purchase. So instead of chasing those short-term pricing surges, TSMC prioritizes 3 absolute fundamentals to win business: technology leadership, manufacturing excellence, and customer trust. As Wei put it, I don't want to squeeze them out from the market. TSMC's long-term philosophy is built entirely on ensuring their partners actually survive, thrive, and continue to innovate. Basically, if their customers win, TSMC wins. Which leaves us with one final, pretty profound thought to take away from this explainer. We spend so much time marveling at the shiny software interfaces and the AI models that seem to update overnight. But if the physical foundation of AI takes 5 to 7 years and upwards of $64 billion a year to construct, who truly holds the keys to the tech revolution? Is it the software companies in the spotlight, or the manufacturers quietly building the engine in the background? Thanks for joining me to explore the fascinating reality behind the AI boom. Keep learning, and I'll catch you in the next one.